So, you chose the bad news first. Interesting. That's exactly what I would have done. Hello, my name is David Gensler, founder of Concierge Retirement Services. Did you know that less than 15% of us will open a bad news envelope first? Can you imagine receiving a phone call or an email from your advisor telling you that your defined benefit plan or your cash balance plan is overfunded, and it's likely that 70 to 90% of that overfunding could end up being confiscated by the IRS in income tax and penalties? Let me show you. Let's say your plan is overfunded by $1 million. The excise tax penalty you'll owe is 50% or $500,000. That means your $1 million is reduced to only $500,000. It gets worse. Because excise taxes are not deductible, you're also going to owe federal income tax on the entire $1 million. Meaning, if you're in a 30% tax bracket, you're surrendering another $300,000. Your $1 million is now slashed down to only $200,000. But our government's not done with you yet. If you live in a state that also collects state income tax, which is the vast majority of them, you're going to lose roughly another 5% of your original amount, or $50,000 more. That leaves you with only $150,000 of your original $1 million, 15 cents on the dollar. This is devastating news. In the last few years, the stock market has almost consistently gone up, and nothing seemed to stand in its way. If you're like me, your plan is invested in the stock market, and it has risen to unexpected heights. Congratulations. Maybe. It all depends on whether or not your plan is now classified as being overfunded. To make sure you're not classified as overfunded, it requires something we've been doing for over 40 years. So here's some good news. If your plan is overfunded, we can help you hold on to the lion's share of your hard-earned money and prevent most of the added income tax and penalties, at least 70 to 90% of them. We have a proven strategy for business owners just like you. And we've dealt with this situation many times and saved people hundreds of thousands of dollars. We're typically engaged by your advisors because we're actuaries. That means we use our valuation skills to deal with the measurement and management of risk and uncertainty. We're very experienced at using our actuarial skills to make certain that if you do have an overfunded plan, we can work with you and your professional advisors to preserve the majority of your assets. Here's some more good news. I can quickly tell you if your plan is classified as overfunded. It takes just a couple of questions and a quick review of a few documents to immediately give you that answer. There's no charge and no risk on your behalf, just the facts, yes or no. And when I say there's no fee and no obligation for our evaluation, I mean it. You won't get any pushy selling from me. I'm not that kind of guy. I've been in enough of these situations to know there's a whole lot of people out here that don't have a clue that being overfunded is even an issue. Wouldn't you rather be certain, especially when there's no risk on your behalf? But fair warning, if you don't take the appropriate action to solve the problem, I can assure you of one thing: this problem will not go away on its own. If you'd like to know more, or you'd like to have your tax preparer, financial advisor, or CPA discover more detailed information, please reach out to me. I'm easy to get a hold of. My phone number and my contact information are right below this video. We're here to help. Call or fill out the form below. I'm here to make sure you're on the safe side. Thank you.